Earlier this morning, Yahoo Finance's Brian Cheung sat down for an exclusive interview with St. Louis Fed President James Bullard. And Brian Cheung joins me now with more. Brian, you covered a wide range of topics with Bullard. The one thing that stuck out to me is that he's still pretty confident in the U.S. economy.
Yeah, and I think the Beige Book numbers that you actually just talked about seems to solidify that as well. As you mentioned, some districts actually reported overall economic strengthening for the last period, the last month. Also said that the tight labor market has led to some continued wage pressure. So maybe some hints that there could be some wage growth in the form of a higher inflation headed forward as well. But yes, you're right. I spoke with St. Louis Fed President James Bullard earlier this morning. We talked about a number of topics, including negative interest rate policies and Fed independence. Here was our conversation.
I think the negative rate policy has had mixed reviews in Japan and in Europe. I'm hopeful that we don't go that route in the U.S. I think it does cause disruption to the system of financial intermediation. Might have different effects in the U.S. than what it's had in Japan or Europe. So part of the framework debate is exactly centered around the muted inflation issue, the idea that inflation's been below target since more or less consistently since 2012. How can we more consistently hit our inflation target? That's a big one. And then if we run a good policy and continuously hit the 2% inflation target, will that be enough to keep us away from the zero lower bound? I think those are two questions that are really driving this framework review here.
Right. And last point on independence of the Federal Reserve, it seems like there's some pressure mounting in Washington to maybe mix up the amount of voices on the Fed board. What are your thoughts in terms of the difference between the diversity of opinion on the Fed board and having independence?
Yeah, I quit using the phrase independence. I say arm's length from politics. It's designed in the Federal Reserve Act. It has all these provisions that are designed to keep it arm's length from politics. It's not that, of course, it's a creature of Congress and a creature of the political system. So in some sense, of course, it's right. Political, but you know, you've got a public-private partnership with the reserve banks and the Board of Governors in Washington, D.C. The governors are appointed by the president and confirmed by the Senate. The presidents of the banks are not. But there are rules about who can be on the boards of directors. You've got 14-year terms for the governors. That's supposed to insulate them from the political process. So also, it's a big committee and 19 people at full strength. So what happens is you get only slow evolution and you get a lot of continuity in monetary policy. So in that sense, I think it's brilliant. It's a brilliant design and has worked very well. And I don't think any one appointment would make too much difference in the process overall.
So as you can hear, St. Louis Fed President James Bullard not completely swayed about the effectiveness of negative interest rate policy and on independence, doesn't particularly worry that, having one individual on the board would sway the central bank's policy one way or another. Again, all this coming under the looming cloud of President Trump trying to get Herman Cain and also Stephen Moore onto the Fed board. But again, we have more clips from this interview that will be airing on Yahoo Finance in the final round today as well.
And I'm sure that they'll all be online as well. Brian Cheung, great interview. Thanks so much for joining us.